So I've done the first scan, and as you can see, that in the first scan, I can find out there are only five stocks entering stage two. That's bad, right? So only five stocks have entered stage two after the first scan, and then I'll try to do the second scan. So basically, it's a combination of three scans, right? These are very advanced scans where we try to catch those names which enter stage two, right? So in second scan, we have got nothing. Again, that's a very bad sign. And then I'll try to scan for the third time, and we'll see what happens, right? So I can see that MRPL has come up again, and this is the same name that is there already. So first of the name is T-Bomb, right? This is kind of an archaic micro cap name with not so much financial information, as well as the data is not there, right? So it's kind of a big time multi-bagger in the past, and it has been consolidating for last 2 years, and it's trying to break out with 32% move in a single week. So if we see the daily chart, it is a very low float stock where the usual volumes is in the tunes of 30, right? This is kind of ultra low liquid stock, right? Even if you place 15 orders, right, or the 15 stocks shares, like you place your order, right, those orders might not get filled, right? This is so ultra low liquid name, right? And that is why we should try to ignore such names wherein we cannot build such good positions, and such names are kind of very illiquid. And after a straight one time multi-bagger move, right, we should try to ignore names which are trying to go into second innings of their journey, right? So that is why I would ignore this name. Being an ultra low market cap, archaic name, we don't have a story behind. It has been a good multi-bagger in the past, but with very low float and low volumes, right? That doesn't make sense. And we'll move to second one, MRPL, right? So these refineries and petroleum product companies, right? So we'll try to ignore again Chennai Petro, MRPL, and names of those likes. And because these are news driven and oil based, right? So people might try to speculate right now. But I believe these names are in stage one or early stage two right now after a strong stage four decline. So as you can see on the left hand side, this name has fallen 65% in one go. Thereafter, it bottomed in stage four here, and then again it entered stage two, and right now it's in early stage two formation. But at this point of time, since it's a commodity and supply demand driven name, so I would ignore it straight away. And this week this breakout is based on 7% kind of move, which is not so strong, and the catalyst is not there. That's why I would ignore at this point of time. Now, out of five, we have ignored two names, right? We are remaining with only three names. That's very easy, right? Now, next up, we have Sundaram Clayton. Now, this is very interesting, right? So, again, I'll share one strategy here. There are times in the life cycle of a stock when, as an investor, we might analyze the stock early in the life cycle. That is one scenario. Now, there are scenario when we analyze at the right time, and there are scenarios when we analyze at the wrong time, which is kind of late. For example, in case of Sivom, right? We don't know. Actually, it has been a multi-bagger for one time. It's a low float, illiquid stock. We don't know what would happen. It's trying to start the second inning. I mean, there could be a possibility that it could do something, right? But the odds are not stacked in our favor, right? So there we can see, okay, this scenario might be late. We might have missed the train in the earlier cycle. What to do? We have an opportunity to ignore because we have a lot of factors which are not working in our favor. We don't have to catch every train, right? But there could be possibilities. For example, in case of Sundaram Clayton, right? One thing that I can say is we are early in catching this one. Why? Okay, let's start with the story first. So the story is, I'll not go in deep or depth about this name because it is kind of early right now, and this is not the right time. And when the right time comes, we'll analyze further, like the deep dive that we do for stocks, right? We'll do it for this name, but not right now. Okay. So the story is Sundaram Clayton. Sundaram Clayton, basically, it is coming from a very good group like TVS Group company, high marquee, big time promoter, big time integrity, and everything is good, right? Things are fine. But this company had two parts, right? So one is the holding part of the company, which used to, I think, kind of hold 35% of the TVS motor stock. That holding company has been demerged and again listed as a separate company. Now, there are two companies out of Sundaram Clayton. One is the auto ancillary part, which has the aluminum die casting unit, which is housed in Sundaram Clayton, SCL. And the second part is the holding company, which is the other listed company, right? We don't have any interest in the holding company. Okay. We are looking at the Sundaram Clayton right now, which is housing the aluminum die casting unit. And it has a diversified manufacturing unit spread across the globe, particularly, say, in the United States. It has the unit in Chennai. So a new plant they have built with a capital expenditure of 550 to 600 crores kind of expenditure that they have done. Now, the story is after the demerger, people thought that this whole company was getting a holdco discount. Now, what do you mean by holdco discount? It means that the company which has the holding company within it, this company, right? then the investors apply a holding company discount, which means that whatever the value of the assets that the company hold, you give a discount to of 60 to 80%, and you value the company lower, right? That is the holdco discount. Now, after that, holding company is demerged and listed separately, right? This is a pure commercial vehicle come aluminum die casting auto ancillary company. Okay, it's done. So the valuation should be as such. So after the listing, what has happened is it has given a good return. So investors might be excited that okay, we are getting a standalone 2,000 crores company, a TVS Group company, 2,000 crores listed company at a good valuation, right? But the story was very different. The story was basically this was facing big time headwinds, right? Basically in their United States plant where they are incurring losses quarter and quarter. That is the number one story. Okay. Now they are incurring losses. Beyond that, what they have done, they have put up a plant in Chennai, a very state of the art good plant in Chennai, with the capital, I think through debt and equity that they have raised recently. I think through debt they have funded their capital expenditure, 550 to 600 odd crores kind of expenditure that they have done, and the plant is, I think, up and running. I believe we have to see if commercial production has started or not. That we'll have to see, right? But for now, the story is again on the side of capital expenditure and a capex story, right? Now, third part to it is high debt. So what this company has done, basically, it has partly funded the capital expenditure through debt, and it is funding the losses in its US subsidiary through debt, right? Now the debt has increased or ballooned to the levels of 1,700 to 1,800 crores, right? So the whole company, the market cap was around 2,000, 2,500 crores, and the debt is around 1,800 crores, right? So what this company has done, this company has raised up some equities or funding through QIP, 400 crores or something, and partly repaid the debt. Okay, that is one thing that it has done. Secondly, it has sold some part of its land and got some good monies, I believe. The initial part, I believe, 25 crores, this company has received after signing the agreement. And beyond that, I believe they might receive further 500 crores or something, right? Then the debt might reduce further to 1,000 to 1,100 kind of crores kind of scenario. Okay, and some part would be utilized obviously for working capital purposes and like that, and maintenance capex also, whatever the need may be. So in the end, in the totality, by the end of March 2026, I think the debt might reduce towards 1,100 crores, and the debt to equity ratio might reduce to 1 times debt to equity, which was around 1.7 to 1.8 times, right? So the second story, apart from the capital expenditure, is the debt reduction story. Now, that debt reduction story would lead to re-rating in the normal cases, right? But the second thing that hit the company was the US tariff, Trump tariff tantrum, right? Due to that, again, the bleeding US subsidiary bleeded heavily and still bleeding right now, and there is no respite. And that is where it is feeling the pain, and that is why the price has gone to deep stage four, right? As you can see on the charts, right? So from 2,934 rupees, it made a low of 1,112, right? 12.8, 11. Make it 4 times 1, right? So 1,111. Okay. Now it is kind of 62% deep base. So that's a very good decline. Okay. Now, being a company from a strong parentage, that is TVS Group company, number one. Number two, they have deep pockets. Whenever they feel like they might raise capital, they might fund equity, whatever. They have all the resources in place. Not a big deal, right? So the existential crisis or terminal value risk is not there for this company. That is for sure. Second is it's a turnaround company because it's a loss-making company. There is high depreciation right now. It is trying to turn around with the new capital expenditure that it has done, and it's into a cyclical industry, right? So it's into aluminum die casting, serving the passenger vehicles, commercial vehicles, and likes to that. So we'll have to see when this turnaround happens, and this turnaround would only happen if they reduce down their losses in their US subsidiaries and elsewhere. Indian subsidiary should increase their profitability. The US subsidiary should reduce their losses, and likewise they should chart their path for future turnaround. Right. So it comes into a turnaround category. There is a risk. Obviously, turnaround seldom turns, but we'll have to see what happens. Now, what to do? Since this stock has fallen more than 60%, so the stage two should be at least 6 months to 1 year long. So how long the stage two is? Barely 3 months, right? So it has completed stage four, like we see right here in 1st of February 2026, right? Just a few weeks prior. So here we can say that, okay, stage four is done. Now stage one has started. So that is why I'm saying that this is very early in its journey. And for next few months, right, I can say for next 2 to 3 quarters, by the end of this year, we'll have to see and we'll have to sit and analyze and see if this is going to consolidate on the right hand side. Yes, then how long it should consolidate? Yes, then okay, next 2 to 3 quarters. Okay, then fine. Then if earnings are going to turn around or not? Okay, yes, then if earnings are going to turn around, then the revival should happen with stage two on the right hand side. So right now, whatever stage two breakout that we are seeing right now on higher volumes, That is on the base of 4.5% kind of move. That is weak. It is very early in its cycle. I know this is a demerger base, very strong company, but we'll have to sit on our hands right now, wait for the right moment, not get lured into catching the bottom. We don't know where the bottom is actually, right? We don't know what would happen in the market, if the stock would continue for the downfall right now or not. We don't know, right? But what we know is we have to have our patience in hand. We have to maintain our capital, sit on our hands and see if stage one continues or not. Most probably stage one would continue for next 2 to 3 quarters. If that continues, okay, then where would it settle down? Wherever it settles down, we'll have a upper limit marked around that. And if a further stage two breakout happens, then we would be the first person to catch it and ride it on the right hand side, right? As we always know that the all time high for a great company acts as a magnet. So this high of 2934 would act as a magnet, and it would be a straight doubler, right? Straight doubler. So there would be two strategies. One, for those guys who don't know how to time, right? Simply sipping is a good strategy, right? If a stock enters stage one, right now this has entered stage one. This is early stage one, so doing the sip is a right strategy. That is number one. Number two, okay, there is stuck capital while sipping. That capital might not accrue any returns. Then obviously sit for some time, 2 3 quarters, wait for the right opportunity, wait for the stock to form a proper stage one base, and then the breakout happens. Then we'll be ready to catch it on the right hand side, and then we'll see the journey happening on the right hand side. Okay. So right now it goes into the watch list with no further action from my side. Obviously, I'll not be acting in my portfolio, but it's a very interesting name, a demerger name that has come up this week only for us to study and sharpen our skilling abilities. Right. Next is another stalwart, right? Thermex is a very nice company in capital goods sector, but right now again the breakout is very weak, right? So 0.2% move, I would ignore straight away. This is a second wave down and still has to form a nice consolidation pattern on the right hand side in this way, right? So on the left hand side we have a nice shoulder formation. I'll just draw the shoulder. So this is a shoulder formation on the left hand side. On the right hand side we can see a nice head formation. So the head formation might go up to this level of 4,000, right? Something around 4,000, it might go towards its right hand side and form a head formation. And beyond that, we should also see a next shoulder formation and then an inverted head and shoulder if it completes, right? Then we can say the pattern is complete and this is ready, right? Still, again, there is no catalyst right now, no earnings trigger, nothing in this case. So we'll just let this name go, and then we'll let this name come again to us in future whenever it is ready. But right now, I would ignore straight away. Okay. The last name in our bag right now is Bear Crop. Now, again, this is a global AMC. Great name into seeds and those things. But again, it has not given great returns for last so many years. If you can see the chart, right? It has been a wealth destroyer, or we can say it's a value trap, right? There is no growth actually, and it's kind of value trap. And suddenly some news comes in, and there are regulatory issues also. A lot of things are happening, right? And that is why, and the valuation is also almost high for such MNCs. So that is the reason I would ignore at this point of time. And this was very easy, right? So we can see out of 5 names, we have ignored 4 names very easily. And we have discussed one name called as Sundaram Clayton, which is kind of a demerger base coming from a group, TVS group, which is a strong group that goes into conditional watch list for us to further read, analyze, research for next 2 to 3 quarters and get ready to act on the right time.